Hello and welcome back. Today we are going to take a look at a stock which is not very popular but has proven itself to be a very good growth and income oriented asset. As you can see on the screen, this stock is Olympia Financial Group. It is a Canadian company that operates in a very niche market. Established in 1996, Olympia Financial Group offers a wide range of services to individuals and businesses alike. In this video, we delve into the business model of Olympia Financial Group, explore how they generate revenue, and take a look at some of the pros and cons of investing in this stock. In order to understand Olympia Financial Group's business model, we need to first understand what kind of company it is. Olympia Financial Group is a non deposit taking trust company. I know it's a mouthful, but in a nutshell, a non deposit taking trust company is a financial institution that provides trust and fiduciary services to clients without accepting any deposits or engaging in traditional banking activities like lending or issuing bank accounts. Such a company primarily focuses on providing financial services like a third party. Hence, think of them like the Amazon of financial services, where they are neither the buyer or the seller, but rather facilitate the exchange of financial services between two parties. When it comes to Olympia Financial Group, their business model revolves around three main segments. These include trust services, health benefit services, and foreign exchange services. Within the trust services segment of their business, they provide investment account services and corporate and shareholder services. Let's take a look at what is included in the investment account services. So, within the investment account services, they provide all the investment options that are available in Canada, such as the RRSP, TFSA, the Retirement Income Fund, Education Savings Plan, locked in retirements, and non registered account. And in addition, they have a wide range of investment options, some of which might not be available with your regular brokers. So if you scroll through the list, which is available on their website, they also allow you to buy private mutual trust funds, private company shares, and also private corporate debt securities. So some of these additional investment options, which you may not find with your regular brokers, could be available through the investment service that this company provides. And along the same lines, they provide trust services to corporations as well. And again, that includes a range of services as I'm just scrolling through over here. So I'll just go through a few of them. So, for example, we have the initial public offering. So, any company that wants to go public needs a number of things to be taken care of, such as the legal advisor team, underwriters, auditors, to make sure everything is accurately reported when they go public. So, that service is provided by this company. Cross border solutions. So, any company that wants to expand its business into a different country again needs to ensure that it is compliant with the regulations of the other country. So, again, those services are provided by them. And similarly, as you scroll down, you will find a range of different services that are very corporate specific for both private and public companies, which are mainly like services that often run behind the scenes. So, this is a good example, disbursement and reinvestment plan. So, again, for income investors like us, the dividend that we receive, the administration of that needs to be taken care of. And a lot of times, the company themselves may not want to go through that admin process. So, they might get a third party company like the Olympia Group to manage that part to ensure that all the dividends are paid out in a timely and accurate manner. Another important part of their business is the private health services plan segment. Through Olympia Benefits, which is a subsidiary, they offer affordable and customizable health and dental benefit plans for both small businesses and incorporated individuals. So, if you have a job, I'm pretty sure your company most likely provides some kind of health or dental benefit or both. And a lot of times the companies use third party financial services like Olympia to get those services. And last but not the least, they have a business segment that helps facilitate foreign exchange for companies or corporations. So, this is mainly for businesses that have a good chunk of their revenue coming from foreign countries. So, such businesses are exposed to foreign exchange risk because currency fluctuations could eat up some of your profits. Hence, they need a platform which not only facilitates large scale foreign exchange transactions, but also provides them the best foreign exchange rates that would minimize the potential of losses associated with foreign exchange. So, that service is also provided by them. This chart shows how each of their three business segments generates revenue for the company. What I find really interesting is that all three segments cater to a range of different industries. Hence, revenue from these segments is quite diversified and not dependent on any single industry. Even the trust services provided to individuals, which includes registered and non registered accounts, mainly facilitate purchase of securities similar to a broker. Hence, they don't need to worry about risks like a bank run or fluctuations in interest rates like a traditional bank. This company's business model is remarkably immune to such risks traditionally associated with finance companies. Now, let us take a look at its financial performance. If we keep an eye on its net income and revenue figures, we will see that the company has shown a steady growth in both these numbers in the past 4 quarters. Starting with March 2023, we can see that its revenue and its net income has grown at a steady pace. Another thing you might notice is the year over year figure mentioned over here, and that too has shown remarkable improvement in each of the past 4 quarters. This financial performance also reflects in its stock price, which has gone up by 21% in the past 1 year. And despite the increase in the stock price, it continues to have a low PE ratio of 10.32 and a pretty good dividend yield of 7%. However, when it comes to individual stocks, we need to be extra careful when it comes to the PE ratio and the dividend yield. Simply because when it comes to ETFs, which are following an index, there a single company going down to zero does not really have any major impact on the index as a whole. But if we are only invested in one company, then that company could suffer major losses in the future. So it's important to understand if this PE ratio is really good or bad by comparing it with other similar companies. And the same also applies for the dividend yield as well. Here is a chart of other comparable companies in the Canadian stock market. All of them offer some kind of financial service which is not dependent on deposit taking or lending. One thing we notice is that Olympia Financial Group has the lowest price to earnings ratio, only behind Fairfax Financial Holdings. At the same time, it has the highest dividend yield. It also has a high dividend payout ratio, which some people might consider risky. Dividend payout ratio represents the percentage of net income a company pays out to its shareholders. The income that is not paid out gets reinvested in the company. Thus, the more income that is paid out, the less income the company has for its own growth. In case of Olympia Financial Group, we can see that a little over 24% of their income is getting reinvested in the company. When compared to other companies on this chart, we see that it is less income being reinvested, but at the same time, using this much reinvestment, they were able to give a capital return of 21% in the past 1 year. If we zoom to the past 5 years, they have practically doubled the capital return, which is almost a 15% year over year return without including the dividend income. So, even with a high dividend payout ratio, this company has managed to increase its capital returns for the investors. And this growth despite the minimum reinvestment, eventually boils down to their unique business model where they're operating in a very niche market, providing their services to other businesses and generating revenue through fees and subscriptions, which is a very profitable way of doing business, as we know from other subscription based tech companies, where once you lock in a customer, the revenue from that customer is pretty much guaranteed for the foreseeable future. Last but not the least, we need to take a look at the risks associated with this business. The biggest risk remains the fact that it is a single company. Unlike an index, its value could go down to zero. At the same time, it has the potential to outperform an index if it continues to perform the way it has done in the past 5 years. Also, there is the possibility of competition. In future, there might be more companies targeting the same niche market segments which form the core of Olympia Financial Group's revenue. They are providing a good service, but they do not particularly have any moat. Hence, other businesses could mimic the same services at a lower price and capture some of their market share. So, these are the risk factors we should keep in mind before investing. With that said, I do want to highlight something that I missed while checking their financial performance earlier in the video. If we look at the last item on this list, cost of revenue, we find that they have managed to reduce it on an year over year basis in the past 4 quarters. The cost of revenue is basically the total cost a business incurs in order to generate its revenue. So that includes employee salaries, sales and marketing expenses, admin expenses, and so on. This is really good. Not only are they increasing their revenue, but also reducing the cost incurred in generating that revenue, while also paying out 75% of their net income to the investors. This tells me that the top management of the company is working in a very efficient manner. This is something I want to see when I am purchasing the stock of a company. So that brings us to the end of this video. Let me know in the comment section if you already knew about this company or did you just found out about it through this video. As always, do your own due diligence before making any investment decision. The views and opinions expressed in this video are simply based on my research and understanding and do not count as investment advice. Thanks for watching. If you found some value in this video, don't forget to like, share, and subscribe. I will see you guys in the next one.